Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, it's pretty amazing to see that, considering the Fed meeting yesterday was so highly anticipated, how relatively flat the market is today. Of course, Nasdaq-100 outperforming, but it's been somewhat of a muted reaction.
I mean, I think if you look underneath the cover, we are seeing, some movement in certain groups. The cyclicals, the financials especially, are really taking it on the chin. And I've been getting questions, well, if the Fed is going to raise rates sooner than expected, isn't higher rates good for financials? But it really depends on which part of the yield curve you look at. The short end, moved sharply higher yesterday, but the long end came in pretty sharply. So the curve is essentially collapsing. Spreads are collapsing, whether 210s or 5s and 30s, especially the longer end, really collapsing meaningfully. And so it delayed reaction, but certain groups, especially financials and energy, are seeing it today on the downside.
I think the way commodities have been reacting has been an interesting place to watch as well.
Yeah, commodities. Yeah, I mean, they've had a phenomenal run. Oil is still doing well, but we've seen the pullback in lumber, we've seen some pullback in copper. So again, they've had a big run. So if you look at it, think of it just from pure price perspective. After the big gains like that, we do expect some profit taking, some give and taking place underneath the surface. So, I think it's just the ebb and flow of the market. We're seeing now the shift again from value into growth, which we've been highlighting in the ratio chart, where that peak back in March, where it seems to be that the value story still has been getting a lot of play, a lot of push. Maybe rightly so, but that ratio peaked 3 months ago. So, and is now accelerating to the downside here. And I have some charts, and we can take a look at that.
Yeah, let's do that. Pull up your Bloomberg here, and let's look at some fresh levels. Okay,
so this here is actually the spread between the 10-year and 2-year Treasury, and we can see that it's been rising a little bit the last couple of days, and yesterday spiked higher, but today is now collapsing to the downside. And this is the spread between the 30-year and the 5-year Treasury, and you can see this is just falling like a knife. So that's really pressuring a lot of the cyclical names, the energy stocks today, the financials, down about 3% in the financial sector. Materials are down 2.5%. Industrials lower as well. The growth over value trade, or let's flip that value over growth, has been rebounding since the lows since September. But again, as we highlighted, numerous times over the last couple of weeks, this ratio peaked back in March and then made a lower high in May, and now again a lower high in June. So we're back out to the breakout level, just a little bit above it, that this ratio broke out of in late February. So this is now a key zone to key in on here. If this zone does not hold as support and this breaks down below, then that really I would then be zooming out to my long-term monthly period chart, and we've looked at this one as well. This recent rebound in the ratio, which captures value outperforming growth, stalled right at the prior cyclical low. You can even call it a secular low, going back to 2000. Is this going to be resistance? And if so, if this rolls over to the downside, that will be a big negative for value on a relative basis versus growth. And conversely, that would be positive for indices such as the Nasdaq-100. So here's the daily period chart of the Nasdaq-100. We could see on Monday that we did break out to fresh new highs. We broke out of this range that we've been in since early April, and then a couple of days pullback, and then today we have a bullish engulfing candlestick and making again fresh 52-week highs. If we look at this on a weekly perspective, we're just this week breaking out, as we just noted on the daily, we're just this week breaking out above that April high. Weekly RSI is at about 65. You can see even at the worst times on this weekly basis, the RSI always held that 54, 55 level, never made the low. So on the longer term time frame, those who stuck with growth and stuck with the NDX, are benefiting from it now. Looking underneath the hood of the tech sector, we look at the semiconductor index. This is on the cusp here of breaking out of a 4-month trading range. We had a brief breakout in April, pulled right back. Nothing too bearish there. And so it looks like we're going to be on the cusp of breaking out of that again soon. And this S&P 500 technology sector, this right here is now testing the prior highs from March, April. Potential double top here, but given how the rest is looking, given how the NDX is breaking out, my bias is for the trend to continue to the upside. We still have this longer term trend of higher lows, higher highs. And so just waiting to see if this breakout, is confirmed by about 2-3% more to the upside. So all in all, growth is, back in vogue, back in play. And the NDX is certainly, one of the premier benchmarks to capture that.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.